Investors are looking ahead to Wednesday's Federal Reserve meeting. The consensus among analysts over the Fed's next move has gone back and forth, with the CME Fed Watch tool now showing that almost 70% are anticipating that rates will hold steady through the November meeting. Goldman Sachs echoed this sentiment in a recent note, with the strategist saying that the labor market rebalancing and better news on inflation, the FOMC can likely forego a final rate hike this year. Joining us now is Kristina Hooper, Invesco Chief Global Markets Strategist. Kristina, great to speak with you as always and get you some of your insight around this. This is, I put it earlier, as a nothing burger type of meeting. I don't know, from your perspective, is that accurate, especially given the fact that much of the kind of estimate or the probability from the CME Fed Watch tool, at least, is expecting that we're not going to see any type of movement in a hike or a cut at this coming meeting?
Well, I would argue that it's not entirely a nothing burger, because any Fed meeting, as we get close to or are really at the end of the Fed's rate hike cycle, is important. Now, having said that, do I think the Fed is going to hike rates this week? No, I don't. And I hearken back to a meeting last year in June of 2022, in which the Fed had communicated in advance of the meeting that it anticipated hiking rates 50 basis points. But then it got two data points just a few days before the meeting that caused it to actually hike 75 basis points. And that was CPI and Michigan inflation expectations. Well, we got both of those prints last week. And I think the Fed will be comfortable with where we are and will be comfortable sitting on its hands. That was the one potential spoiler, was getting one of those data points that suggested inflation's a bigger concern. But that didn't happen, and so I think the Fed is not going to do anything at this meeting.
Kristina, how do you think the markets, or how should the markets be looking at the recent jump that we've seen in the price of oil, how that's going to factor in to the inflation equation, and the Fed really potentially having to get more aggressive here down the line in order to see a material slowing in inflation?
Well, the Fed is really focused on core CPI, and it takes time for higher oil prices to filter into core CPI. So if this is a relatively short-term problem, and I suspect it is, just because, as you mentioned, we're likely to see more production, more supply come online with time, then it's unlikely to be a very big concern for the Fed. Now, it can certainly alter consumer inflation expectations. It can seep into core inflation. So I don't mean to dismiss it, but I don't think it's going to alter the Fed's path in the near term.
We've already heard some calls for a rate cut, some of them as early as first quarter next year. Do you believe that the Fed, even as they're getting towards the end of their tightening, are signaling, or at least having more advanced discussion around what a cut could potentially do to spur at least some people back into the housing market, as we continue to track and are expecting even more data on that front this week?
Well, I'm sure there are probably at least a few members of the FOMC that are eager to get to that discussion. I don't know how premature it would be at this point. But having said that, we have to recognize there are lagged effects for monetary policy. So I suspect that we are going to see a deterioration in economic data. I don't think we're going to have a hard landing, but I do think we're going to have a bumpy landing. And that could push the Fed to really seriously consider in coming months when it is going to cut. And it could start cutting as early as the first quarter of 2024. I know it's not inclined to. It would rather keep rates higher for longer. But as you rightly pointed out, housing is a big concern. We've heard as much from different members of the FOMC that they were somewhat surprised by what's happening in housing because of the rate hikes we've seen. And so there are certainly reasons for the Fed to start cutting, but they're not compelling yet. But hopefully those discussions will begin soon.